Hello everybody and welcome to this Dasseti and AIMA webinar looking at investor due diligence. Today we will be looking at how you prepare yourselves for the year ahead, making sure that your benchmarks against your peers, why transparency matters, and making sure that you are aligned with your investors. And we'll be doing this using research gathered by Dasseti, more of which very shortly. My name is James Hopegood. I'm Director of Asset Management at AIMA, and I'm joined today by Liron Mandelbaum and Fiona Sherwood from Dasseti, who will now just introduce themselves briefly to you.
Okay, hi everyone, I'm Fiona Sherwood. I'm the Chief Marketing Officer for Dasseti, formerly Diligence, who you may have heard of. It's good to have you with us. I'll hand over to Liron.
Yeah, hello everyone. I'm Liron Mandelbaum. I'm the COO of Dasseti, and thanks for joining us.
And not everybody knows Dasseti, though you've been around for a while. Would you like to just briefly talk us through the new name, please?
Sure, absolutely. Dasseti, so formerly we were Diligent. And so, that's the kind of name that's what we started off in the industry about 3 or 4 years ago now. And Dasseti is a new name that kind of shows the evolution of the industry away from just data collection on the due diligence side and more into analysis, because Dasseti means to reveal, to show. So that's what we do for our clients, and we'll explain a little bit about our business and why we have a unique perspective to share with the folks on the line here. So, the precipice for the name change was also a major investment by NASDAQ, who is our investment partner, allowing us to do and deliver more technologies to the space. Again, things that we will talk about the implications for both sides, for the people sending out questionnaires and the people answering them as well through this presentation. Our core business, as you can see here, we're a global business. We work with allocators, over 100 allocators and consultants sending out requests for information. Hence, we have the data that Fiona will share with you and the insights that we'll deliver. And on the other side, we work with, at this point, almost 8,000 managers, GPs in the alternative space, in the traditional space around the globe, responding to those 100+ allocators and consultants. So again, that we're sitting in the middle there, we get to see both sides. We have tools for both sides. We see the pain and we see kind of where the industry is moving. And that's really, this slide kind of captured on a very high level. The challenges, in short, for both sides is a lot of paperwork, right? When you're asking more questions, that's painful on the IR teams answering them, but it also means that the consultants and allocators now need to review more data points. So they both have these challenges, and technology like our firm helps them automate these processes so they could get to that, as I said, to reveal the insight, the creation of benchmarks for the allocators to know when something is worthy of being a risk or something that adjusts the risk profile of an investment. And for the manager side, ability to respond and scale and be more efficient. So you could focus on raising money. You could focus on running the business and investing versus answering 400 questions at a clip. So that's kind of the two key challenges that we have. If I look now at just the product, and I think it's important to note so you guys know what perspective we're bringing in. On the collection side, that's we kind of break our product into two, whether you're collecting or responding, two different products. When you're collecting, this doesn't just mean allocators and consultants. This means managers collecting data from their vendors and third parties, GPs collecting environmental data now that's required in Europe, right? So a lot of different players will use tools to automate the collection. And essentially, we handle that from automating the way you collect it, to cleaning the data, to visualizing it, to getting the insight, and then creating the reporting you need to for all the stakeholders. On the response side, essentially, think of it as an RFP tool like a Loopy or Qvidian, but just for financial services, just for our industry, because there's unique needs for our industry. And from that perspective, we get to see a lot of existing processes for IR teams, how they evolve with technology, and very much so deep in the pain points of the existing ecosystem. So we hope to take all that today and use the data that we've kind of looked at in a high level aggregate basis. And I'll let Fiona share kind of what's driving our research we're sharing with you today.
Yeah, thank you, Lorraine. Just to dig in a little bit deeper on a couple of the issues you touched on there. When firms are thinking about their due diligence requirements and duties, what should they be thinking about? How should they be approaching this? What do they need to think about and have in place ahead of getting in touch with you guys?
Yeah, that's a fair question. It's really the requirement to have is an understanding of the need, right? So an understanding of how much work are you doing, how much of it could benefit from automation, right? And the rule of thumb there is, if anything you're doing feels repetitive, then technology can help. And a lot of it is repetitive. It's not part of our research here, but essentially 80% of all questions from all allocators are essentially the same, but each one of the allocator consultant will ask it slightly differently. So, it's the same search, it's the same idea, but it's that repetitive motion. So the idea there is to think, is what you're doing feel repetitive? And then there's a need, because then, it could be quite simple or quite complex depending on how much organization or structure you want to introduce to your process with the technology. It's not a requirement. It's not a requirement to have a deep process with 30 steps to then say, okay, let me digitize this process. No, it's really, do you have something that feels repetitive that your team can use their time to do other components of the business, like fundraising, or just maybe dealing with more nuanced requests, and that's really where the benefit would come.
That's great. Thank you very much. So you're saying Dasseti's been making a great deal of use of its current and historical data to look in more detail at how the work on due diligence has been evolving. So Fiona, can you tell us a bit about the data sets you've been able to look at and how deep you've been able to go?
Yeah, sure. So we last year we decided that we are purely a platform provider, but we obviously have sight of hundreds of thousands of questionnaires passing through our platform. And, more and more we're starting to be asked for advice on the best way to phrase things or what questions to ask. So what we thought we would do is we would delve into that data set and just have a look and see if there's anything, obviously, completely anonymized, but if there's anything we could share with the world, with the industry, to help them either improve their responses or make better decisions about what to ask for. So for the purposes of this, we took a subset of our data and we tried to select alternative managers responding to questionnaires. So the data subset that we've looked at is over 200,000 questions spread across more than 500 questionnaires. That goes out to 1,100 managers who are globally distributed. And we have tried to narrow that down to alternative asset managers. So that's hedge funds, private equity firms, real estate firms. And as you can imagine, it was a massive piece of work. It was it was like looking for a needle in a haystack to start with. But as we started to look more and more into A, kind of what questions were being asked, and B, the timelines. So what was being asked back in 2020, 2019, 2020, and what's being asked today, we did notice a few patterns emerging, which we thought might be useful to share with you. And also we're going to give a bit of feedback on why we think that's important and what we think that means and how you could use that information to help you. So we'll just look at the first finding. So what we noticed was that questionnaires are actually getting longer. Now, this probably won't be a surprise to anyone on the call because you're the ones who are answering these, but we found that between 2020 and 2022, there was around a 20% increase in the length of questionnaires. And when we looked more deeply at the questionnaires, we realised that the questions were becoming less qualitative and more quantitative. Very hard to say. And what we think has happened is that allocators are asking more yes/no questions, and then they're asking for supporting evidence. So that was something that we thought was actually quite an interesting transition. So less about opinion and more about yes, no, flagging. And that we have a theory on why that is.
Yeah. So
I'll let Lorraine share that with you.
Yeah. So what lessons can firms then take from this? I'm thinking about your previous thoughts about how firms prepare themselves. How does this fit in together with the kind of prep work that firms need to do before they start doing this work?
Yeah, there's a couple of implications here. So the increase in the length of the questionnaire doesn't mean that there's necessarily new topics, so there are definitely some that are becoming bigger. We'll cover that. It really means that they're asking things in a more quantitative way and also a more mechanical way, a lot more yeses and nos, a lot more multiple choice. And the driver behind that is to create benchmarking on their side, right? They can't just, if they ask open-ended questions, they can't really extract out the particular component like the vendor, let's say, or a certain process. But if they break it down to multiple choice, they can. So that's kind of a signal that a potential allocator consultant is starting to benchmark something on their side. If you've seen it more open-ended and now switching to more discrete choices. But the implications mean that you also need to think in terms of two ways. When you see a question that's just yes or no, for the most part now, especially in a digital platform, it means almost always there's something coming behind it, right? So be prepared if you're on the IR side and it's asking you, let's just take a simple example like a UNPRI signatory. It's not going to stop at a yes or no there. So if you go to your subject matter expert and just confirm that you are in the new year, realize that there'll probably be some follow-on questions. And that's kind of where this length of the questionnaire gets bigger. So, it's always good, especially in a digital platform, and if it's getting as a Word doc, you could see the follow-on questions. In the digital platform, select yes and see if anything pops up. Odds are they will, to provide some documentation and further down. Again, use your SME's time more efficiently. But it also means that you got to assume that the questionnaires are going to go deeper. Just confirming something is not going to cut it anymore. And so as you're kind of preparing your data and thinking in terms of what kind of data should I make easily accessible to my team to answer questionnaires with, it's going to go a little deeper than confirming something is a yes or no. They're going to want to see a process. And I think that's really coming from the fact that, over time, more managers, it's not the allocators kind of creating longer and longer questions. They're seeing deeper answers from some managers and GPs. Because of that, they're using that to formulate questions and say, wow, can everybody provide me with this level of depth? So a lot of it, when you see a question with a lot of parts to it, it means somebody at some point probably answers. If you're thinking about in my asset class of people filling this stuff out, somebody is providing the data. That's almost always that precipice to get teams to ask deeper questions, is at least what we've noticed. And of course, regulation will also drive that. But certainly, as the questionnaire, as time goes by, the allocators, consultants get deeper and deeper into the questions based on the answers they've gotten in the past.
That's very helpful indeed. Just one final thought about your reflections on this. You mentioned regulatory drivers, and I'm recently arrived at AIMA from the Financial Conduct Authority in the UK, where they're putting in place a whole new raft of systems. So is the drive because the industry wants more information, or is it also, well, regulators asking this on a platform, on some kind of new system, and we think that they might be following up with questions, so we need to find out?
Yeah, that's kind of leading into our next insight. So maybe I'll answer that point there. The short answer is yes, with some fine nuances there about what do consultants and allocators really want, and then what are they forced to want by the regulators, right? And it's not, force maybe is a strong word, but essentially you're getting it from both sides. They definitely have their own desires, and we touch a little bit of it in this point here, this concept of benchmarking. They want to know, even small allocators, if they have enough funds, they can start to build their own internal benchmarking, what's appropriate and what's not, kind of in terms of response, in terms of particular third party that a manager should be using. And then the regulation part will is kind of the driver of those ebbs and flows, which we'll cover next.
Thank you very much. Fiona, would you like to take us through the next part of the findings?
Sure, yeah. So when we mapped out, how many questionnaires pass through the platform at which times, and again, this won't come as any surprise to you, I don't think. We found that due diligence focus comes in ebbs and flows. So, at various points in the year, there are high volumes of questionnaires being asked and answered. So quarterly, annual, and then there are some anomalies. So, the reason for that, we think, is when, if there's some negative press around a high profile scandal or failure, or some news around due diligence that draws everyone to it, or other kind of global events that might force allocators to ask specific questions. But we just thought that was interesting because platforms like ours can actually help smooth those peaks and troughs out, and actually mean that you can deliver consistently high results. But I'll let Lerone talk you through kind of what that means for you as managers.
Yeah, and I'll add here and kind of connect the last point I wanted to finish from James's prior question. We're talking about this ebbs and flows 100% driven by new regulation. It's going to introduce probably a new subsection, or even a lot of allocators like to get ahead of those regulations and start asking those questions sooner. What you will see is that for regulatory type questions, it's much more checking of the box, unfortunately, at least let's just say in the first phase. Something comes out, a new regulation or some advisory note from the FCA or the SEC. And so the first knee-jerk reaction is, we need to collect this data or kind of flag yes or no, are these checks being done? So you'll see that typically is a yes or no. And then, always these yes or no's come with comment boxes. And as managers and GPs answer those and give more elaborate comments, those evolve into more detailed questions, kind of that driver of that 20% increase in total number of questions, right? So you have this kind of cycle in here. So, the regulators are kind of forcing a knee-jerk reaction, but then the allocators who want to benchmark every answer are using that as kind of a starting point. So it's kind of, it's not always that way. Some already have, sometimes a regulation is just confirming something that a lot of good allocators already do in terms of the way the data they collect. But a lot of times it's, let's say, some new scrutiny in the US and for pension funds around cybersecurity. Everybody now took a little modules from the AIMA questionnaire set, right, and started to make sure they're using them, and that's a good starting point. And then over time that evolves from those yes and no's to more open-ended, more specific, nuanced questions, sometimes varying by your strategy. So that's kind of that trend we see there, and that is that part of that ebbs and flows. So something new comes out, people will respond. Great organizations like AIMA have a bunch of examples to give the allocators and consultants. So you could, if you're, especially everybody on the line here is an AIMA member, the first stop that most consultant allocators take when something new comes up is they say, okay, what does AIMA have already that I'm not asking? So if you guys are aware of those, and this kind of leads to what does it mean to you, if you already have those templates and access to those templates as AIMA members, you can then prepare yourself for such potential questions. At the very least, think about them, if not already have them kind of filled out and ready. And that's the other side. So as we're seeing number of questionnaires increase, the number of LPs using more questionnaires as opposed to kind of consuming directly from data rooms, and the length of the questionnaires increasing, that trend seems to be getting countered with technology on the manager side, on the GP side, because now with you can have your AIMA questionnaires in a system pre-filled out and just pull the answers in, right? A lot of different things that we're seeing that we're developing that the industry already has and is finally implementing, there's reducing that. So it's essentially, especially I think by this year, we'll see probably a countering of that, okay, anything you want to ask, I already, we could prepare for and answer. Thanks to, again, organizations like AIMA kind of prepping us in a sense. So I think that cycle is actually going to neutralize itself. Though there'll be more questions, but it'll be easier to answer them. So I think that's, the idea is there you could prepare yourself. There's great tools already out there. You know what questions they're likely to ask, whether driven by regulation or benchmarking, and you have the tools to potentially automate that, reduce the pain points around actually responding.
That's great. Now, given that we've got some ebbs and flows here, I guess one of my questions to you would be, how can firms use this to their advantage? They can they check out pinch points when they need to allocate resources, deallocate resources? How would you suggest they sort of think about managing, not just managing the ebbs and flows, but also turning this sort of rhythm to their advantage to help their businesses?
Yeah, I think the rhythm has a trend. So when you're, it's kind of when it rains and pours, right? So if you're seeing, typically there's a cadence of quarterly or annual questionnaires coming in at a predictable time. When you see one allocator come out of the blue with something that's more ad hoc, you could immediately anticipate very likely more, right? That will come there. So you can answer it, mechanize the answer in the system so everybody can deliver it across the IR teams, right? And this is what we're saying, kind of smooth out those that effort in terms of your side, the IR team side of responding. So it's not a fire drill every time. We've seen this similarly. So in other words, mechanize every kind of new blip that's coming in, because there'll likely be more to come from that respect. And then in a higher sense, just use technology where appropriate to smooth out the demand. Like to automate certain answers, but also to use that same technology to create your documents, right? That same tool that helps you search and answer external questionnaires can be used to create your own internal questionnaires that you could then put into your data rooms, right? So we talked about AIMA. If you already have those answers and somebody's using the AIMA template, then you could say it's already ready for you in the data room, right? That's how you smooth out that noise and get ahead of it. And again, if you've answered one similar AIMA questionnaire, you can use those answers to pre-fill another one that's slightly different, maybe more focused on a certain new strategy you've launched if you're a multi-strategy hedge fund, right? So again, there's a lot of kind of mixed use cases here, and a lot of the answers in historical questionnaires you've answered have the insights that you need for new questionnaires. You just need to use them and just connect them. And again, technology can do that, and that's what we mean by smoothing out the kind of time pressure.
That's excellent. Thank you very much. And thank you for your very kind references to our quite comprehensive suite of DDQ information, which is on our website, available to members, along with other things in relation to changes in the beneficial ownership legislation in the US and things like that. So Fiona, would you like to take us to the topic of the moment?
Yeah, so again, I'm not sure this will come as any great surprise, but just looking over the last 2 to 3 years of questionnaires, no surprises, more D&I and ESG questions are being asked. But what was kind of slightly surprising is that they are also being answered. So they're not just being asked and met with a no or a blank, they are actually being answered. So we found, when we looked at actual numbers of questions, we found a 1,600% increase in the incidence of ESG or diversity related questions. Now, we thought that was incredibly high. So when we passed it out and made an average, we found that there's an average 10 times more ESG and DEI questions featured in the DDQs that are passing through. Now, it's not just that there's an ESG section or a diversity section. They're actually, the questions are being peppered right through the DDQ now. So they're popping up in every different category of questions, so every subsection, which actually is very encouraging, in my opinion. And we just thought that was a really interesting statistic. So, back in 2020, it would probably get as complicated as, are you a PRI signatory? And please describe your sustainability reporting. Now we're looking at, are you a signatory? What's your score? Do you publish a TCFD report? please attach your policy. And interestingly, around 85% of managers that we looked at had provided their ESG policy. So if you haven't got one, obviously you need to get one. And really specific things like describe your process for monitoring climate change risk and how are you using ESG factors in the weighting of your securities. So it's actually getting quite detailed now. It's no longer just enough to be a BRI signatory.
That's excellent. Thank you, Fiona. So I'm looking at this. Where does it sort of move from being a due diligence issue to you're talking about your wider corporate governance in general, and what does it tell us about how thinking on DE&I and ESG is developing?
Yeah, from what we've seen is we're still quite in a phase of data collection for benchmarking. It feels like a lot of firms are collecting data. They're getting more of it, right? We're talking, we don't have here 2019. A lot of firms just didn't provide like diversity information, and certainly not like in environmental considerations, like typically because it was hard to get and didn't seem like anybody was doing it. Today that's not the case. Large firms are providing a lot of detail. They've built infrastructure to provide it for whether driven by regulation or driven by just the fact that they've noticed other firms tend to be that the smaller firms had better response on DEI level information, and large firms, largest asset managers would just say we don't have that data. And that used to be fine, and now we're seeing the largest firms definitely have this data, and then some of the mid to small firms, are either, if they had it, they continue, and they're slowly catching up to taking the time to create these data points. What that means on the allocator side, now that they have this data, is now they can create those benchmarks. I keep using that word. That's where everybody's headed. They want to know, when we started about, I guess 4 years ago, a lot of due diligence was checking boxes and making sure that you have information, you reviewed it, and it's just kind of a red flag or no red flag. Just, is there a red flag we need to know about or no? And that's it. And now it's, the joke is our platform now has these various color flags, yellow, orange, etc., because it's now that our clients have a lot more data, they can create variations and calculate and try to quantify risk better doing the ODD, even the monitoring process. So not just looking for a red flag, they're trying to now quantify operational risk and compliance risk on that side. So, that driver means that so that kind of happened on the operational side with the traditional questions we've all seen. And now in the ESG and DI, everybody's at the benchmarking phase, and it's going to evolve, and it's starting to evolve to a way to quantify that in terms of risk. Now, if it's an ESG focused fund, essentially the environmental part, they got to check that everything lines up there. There's serious fines if that's not done well. But, as far as diversity, that's still being explored, but the benchmarking is definitely happening. They have, using our system, dashboards to see outliers. And that kind of leads to the next kind of points here where it's still, and even if they had perfect benchmarking and they knew you were an outlier, they're always open to an actual dialogue here with these factors, right? So as long as you're not misrepresenting anything, it's really a dialogue. The benchmarking is not there at all to create, to kick somebody out. Certainly not after they're already invested in you. It's really there to inform the way they make decisions. And we're finding that they are incredibly open, our allocators and consultants, with sharing that with the managers and GPs if they just had a dialogue. And a lot of folks are missing that. And that kind of leads into the next point here.
Yeah, exactly that. So, we've looked at we have an in-app messaging platform, and we've looked at the dialogue taking place on that, and that has definitely increased more than 400% since 2019. So yeah, we're seeing a lot more back and forth, we're seeing a lot more clarification on certain questions, which we believe is a really good thing.
Yeah, I suppose the question there is, does it mean that the work is becoming more complex or too complex, or is it that firms are simply thinking more deeply about it now, and they're putting more more thought into it and therefore asking more questions. And just as an aside to our audience, do please, since we're talking about questions, please ask us questions in the Q&A box, and we will get to answer them once we've finished the formal presentation.
Yeah, so you know, to answer James, it is more thoughtful. You know, especially I would say in the alternative space, the allocators and consultants value the relationship quite a bit with hedge funds and private equity firms, and they're very worried about the number of questions they send them. They're worried about asking questions that are not relevant. They actually care, and this is what I say. You know, the dialogue there, let's say for a more traditional firm, is very. These investments tend to be more transactional. They're very transparent when you're investing in a more traditional kind of fund. But in alternatives, there is a relationship and there is a dialogue, and hence, you know, this 400% increase in conversation. In beginning, Fiona said we're focusing on the alternative space. The questionnaire is going to alternative funds. And, you know, the change in usage is a little bit higher. Maybe, you know, not 4x, but, you know, 1.5x on the traditional side. So there is more conversation happening. And I think, you know, we said this actually a year ago when we did this presentation. That was one of the key findings, is try to have a dialogue when you see a question that doesn't seem to fit, or you have any concern about the implication. Our system allows for that. You know, assuming that it's, you know, it's not in some sort of quiet period for a pension fund, you should ask more questions and engage with the allocator. They might provide you with the benchmarking to say you can even know ahead of time, am I in line or out of line, whatever you're collecting. And B, it allows you to ask them, well, what's driving this change? I think that was another insight from a year ago. We said, anytime you see a new question, there was a lot of thought that went into that new question. They have committees to decide, we're going to ask these new 5 questions. Some expert will opine on them. And so that means that it really matters. New questions matter a great deal. And almost always, like I said, from our experience, they're very, the allocator consultants are very open to discuss why these questions matter now. And they might even give you a little bit of insight to kind of, you know, what answers they're expecting and how they interpret answers in a certain way, right? It's fairly transparent in our industry. Everybody knows what a good answer should be. But do you know in terms of what is everybody else answering a broad scale? Like, what are you looking for a long answer here? Are you just looking to confirm that we do something? They'll tell you. There's no, you know, especially again for monitoring, that's definitely a deep relationship. But even for an RFP, we noticed that they're happy to speak.
That's great. Fiona, I'm not sure if the data supports diving a little deeper, but are there any particular themes that have emerged among this 400% increase? Is there any particular areas that there's been more questioning about? I know it's some question of how much you're able to dice and slice the data.
Well, yeah, I mean, it's a case of looking at the incidents of usage rather than looking at the actual communications. You know, we've sort of had to stay quite high level with it because there's such a huge amount of data. And where I can see responses, I can't actually delve into, you know, what the dialogue is and what's taking place. So that might be something that we have to look at as a separate exercise, I think. But yeah, that certainly would be interesting.
To ask, but...
It's a bit like you know, the ESG policies. I can see that they've attached them, but I haven't got the bandwidth to kind of delve in and look at them and sort of see what sort of quality they are. But again, yeah, it would be a really interesting exercise, I think. Very insightful. How much of that we could share, I'm not sure.
Yeah, I mean, I would say there are 2 sides to this dialogue. Is and the 2 sides are who initiated first. Is it the manager, GP asking for clarity first, or is it the allocator, the LP, asking after they got an answer for more clarity? Right? You could, like an eye opener for the managers using our platform again when they're responding, is that you can actually you can and should initiate the clarification request from your side first. And so, you know, that's something we have to look at the data. That might be actually a very interesting thing to see. How is that shifting? Back, you know, I imagine it's far more, you know, again, because we're looking just number of incidents here. The current trend is far more of the allocator initiating, asking for a little bit more information. But then really what happens next is up to the manager and GP. Do you use this as an opportunity to ask a little bit deeper, ask them a question about the relevance of what they've asked? Or do you just provide that back data point? Do you just reactively respond? And I think, again, everything we're trying to impart here is that the allocators are looking for a dialogue. Like I said, they're nervous on their part. Why are these, maybe a handful of my managers not responding with enough detail? Not in that it's a red flag or anything like that. It's really, am I asking it incorrectly? Are they not understanding what I'm really after here? Like, these are the thoughts that, again, we work with a lot of teams. They truly do think, because particularly on the alternative side, they want to know more about, how you answer these questions. So dialogue is good. Tools like us make it happen, but there's always the phone and email, right? So you don't need a high-tech tool here to increase your dialogue.
Thank you. Fiona, and what's next?
Okay, so final point, and this is something that is, very distinct, that third-party service providers are now being more closely scrutinized. So, I think 2-3 years ago, the questions asked were, who is your administrator? Who's your custodian? Have there been any changes? Now we're seeing questions around control, review, audit of those third parties. So how do you select them? Do you use an RFP? What are your SLAs? What are they providing? And can you actually back up your decisions? And I think, personally, from a manager perspective, if you're an emerging or a new manager, you're not going to be using tier 1 service providers. You're probably going to be looking at tier 2 or 3 service providers, and it's just having the controls and the processes in place to demonstrate your decision making, I guess, and support your decision making and ensure that they're still fit for purpose, kind of, year 2, 3, 4, which we found really interesting. And actually, just going back to this one, the IT controls questionnaires, and this is interesting because I have done work in that space before, but business continuity, cloud, cybersecurity questions, they're almost DDQs in themselves, in their own right. Some of those sections stretch up to 80 questions long. They're huge, and even 2 and 3 years ago, they were not such a big deal. So you really do need to either pass that on to your service provider or have those responses there ready, because, an 80 question IT DDQ is going to take your team a long time to complete.
Thank you very much. What can firms use? So you've got a lot of data here that's coming in. It's quite a rich set of qualitative as well as quantitative data. So how can firms make the best use of this kind of information as it comes in?
Yeah, so there's a lot of data that firms have access to. I would say one added point here to this piece of insight is that we're seeing a lot more managers and GPs using now our collect product, right? They might have used us to respond or to automate their response, and now they have the fiduciary burden to have a deeper analysis of their vendors and third parties. So now they're collecting their own data. And now they're building their own benchmarks in terms of vendor and third-party due diligence. So the cycle is coming around. The technology, in essence, enables all that. So as regulators get more ambitious with what they're expecting or the scope of fiduciary responsibility, again, I'm speaking specifically in the US, but the SEC's proposal to put that burden on investment advisors, that burden will probably spread. If you want US investors, you're going to have to answer to the SEC and kind of work within what they consider as your responsibility. So you're going to have to be collecting your own data here. So, we're in a phase now, again, of this data collection and benchmarking. And the idea is that it should get us to that phase naturally leads to insights, right? Hence the name even Dasseti, right? Like it's coming, it's there for some parts of due diligence. It's going to be there. It's actually very much so there for vendor analysis because those have been done a long time and everybody's got a nice history there. But that's evolving. So I would in part to the GPs and managers on the line to think in terms of, are you collecting your own data? Are you building your own history to now make your own risk decisions, or articulate the way you make risk decisions in terms of third parties and vendors? Because that change is coming to you too. You're going to be on the other side, and then you're going to realize why there's so many questions asked that seem to be repetitive, because you need to know that in great detail, especially again, if a regulator thinks that is part of your financial responsibility now, not just something they can fine you on if you do a poor job of estimating the risk and tracking risk on your third party. So, that it's coming full circle. Everybody's going to have to collect more data. But again, I say, that tools neutralize that. So I don't think the regulators are thinking, oh, now there's electronic tools to make everybody's life easy. Let me put more burden on them. But it just happens to be that, necessity is a mother of innovation, and we're building tools. Platforms like us are building tools to address that, and in a way facilitate deeper due diligence. When you introduce technology, those increase in 20% more questions, they never go down. The waterline never goes down with diligence when it's digital. When you ask a questionnaire, you're not, we talked about a committee figuring out that 5 questions they want to ask around something. They very rarely say, okay, what 5 questions can we remove from the questionnaire? If not, never. So the waterline will keep increasing. And again, technology will enable you to handle it. So it's not going to be a magic cure where you'll automate everything. There'll always be kind of an increase, but do you have the tools to protect you from that as the waterline increases in terms of fiduciary responsibility and just, earning more revenue and increasing your funds by answering to these RFPs.
That's an excellent insight. Thank you. I think it's fair to say that there has been a regulatory focus has increased on concepts such as delegation, outsourcing, and resilience, and this is a reflection of that as well. So it's, I guess, a situation where the information that you're gathering is key to help your customers then actually make sure that they can answer the regulators back when they ask those key questions as they develop.
Absolutely.
Great. Well, that's the end of the formal part of the presentation. Now, so if anyone has any questions, just to kick us off, just a couple of thoughts. Firstly, we've been talking about, you've mentioned during the presentation the difference in responses sometimes from smaller and larger firms. But can you talk a little bit about proportionality in the requirements to do this? So where are the baselines where everyone has to provide this basic level of information, and where is, if it exists, room for smaller firms to be treated proportionately in the amount of data that they have to provide compared with larger firms?
There's definitely an understanding from the allocator consultant side to the size of the firm and resources. It might not feel that way when you get the questionnaire, because they won't. In fact, no client of ours, for example, adjusts the length of the questionnaire based on the size of the manager. But this is where that dialogue comes in terms of what they're expecting. They're benchmarking not just the response in terms of the asset class, but they almost always actually benchmark under another variable of the fund size, right? So they know, for example, going back to a simple explanation of vendors, you can't, you shouldn't, as a small emerging firm, have a tier 1, let's say, auditor, maybe just not, it would be bad use of fees and funds, right? So they have that benchmark, they know what to expect there, but also the certain questions and sections, the length of it is not as important if they know, again, your size. And even if some firms do provide more insight, they have a small AUM, they don't seem to always, they don't hold that against you. And so how can you be certain? Have a dialogue, right? Again, they're open. I find that consultants and particularly allocators are most eager to help the smaller firms in terms of understanding the benchmarking, what's appropriate. The larger firms kind of know, they've done this, they grew with the AUM, they have the resources, they have the tier 1 vendors across the board. And so, the smaller firms, the emerging funds don't have that. And again, we're finding more and more allocators are happy to have a dialogue and tell them, here's what we're seeing, here's what we would hope you would have, here's who we could even recommend as terms of legal counsel or outsourced compliance, things of that nature. They're happy to have discussions around that with you. And so again, if you're not certain, ask, but there's definitely an understanding of the size of the firm and ability to answer.
That's excellent. Thank you very much. One other thought from me, we've seen there's some legislative initiatives going on at the moment, both in Europe as well as in North America. So I'm thinking about the anti-money laundering package that's going through the legislative process at the European Union, and the FinCEN, Financial Crimes Enforcement Network, new rule on beneficial ownership register. That's the first ever federal register. How are these, do you think, how are these leading to practical focus from regulators? What sort of, are you seeing a change in emphasis on what they're asking or what they're looking for? Is it simply they want a bit more information, or are they sort of changing the tune slightly as to what they're worried about?
Yeah, so you're asking in terms of how these regulations or these guidances are affecting the compliance side of the allocators and LPs in terms of what they're looking for and the way they do AML and KYC and those factors?
Indeed, yes.
Yeah, so from that perspective, they're going to want more information, right? The use case to gather data, because again, platform like ours allowed to automate it. It's gonna drive them to ask deeper questions more frequently of parties that they might not have been before engaged in that a deeper level. Like we're talking about, even going to vendors of certain sizes, you think you wouldn't ask anybody in a particular large technology provider these kind of deep questions, but now it's, if you will, the regulators are requiring of you to do your own diligence, trust but verify what you're getting. So I guess the trend that we're seeing here is what used to just be a yes or no. They would go directly to the GP and stop there to say, do you do this or X, or that? And now the burden is on them to the step further and now verify. We're seeing an increase in use of background check providers, and these background check providers typically can work at the firm level too. So they could tell you, and if an IT vendor, in general, the employees under that IT vendor have ever violated anything that should give you a risk or concern, especially at the executive level. And so again, that information is becoming more and more the responsibility of the LP and the GP to kind of have that level of insight around everybody you work with. And of course, when it comes down to your customers, where's the money coming from? What checks do you do? And more specifically, how do you verify what you're being told by your own customers? Again, so that shift is just meaning one layer deeper. Verification can be done digitally, can be done by a third party. These tools, like these background check companies, are expanding into the scope. Or it could just be the responsibility of somebody to send some emails and pick up the phone to prove that they've attempted to verify key data points.
That's excellent. Thank you very much. Now, I can't see any questions on my answer bar. Fiona, do you see any?
No, nothing.
But I think you've given an enormous rich enrichment of data there, and I look forward to watching it develop, and hopefully we'll see it again next year. So I would like to thank you both for a really useful, insightful, and above all, extremely practical run through of this very, very important subject. So thank you both very, very much.
Thanks, James. Thank you very much.
Thanks everyone for attending.
Thanks everyone on the line as well. Thank you.
Thanks. Bye.
Bye.